Tesla stock is massively outperforming the markets today. In fact, the headline S&P is green, but really Tesla is a standout here. Tesla and of course Apple. And we'll get into some of the big news that happened today for Tesla. It's no surprise why Tesla is up so much more than the broader markets today. Imagine if markets were in a good place today. Just the return for Tesla could have been much higher. Now, I want to point this out to start off this video. We have a new Elon Musk. This new Elon Musk, well, expect to see more of this. More of this positive forecasting for Tesla versus what we've gotten in the past. Example, waking up to drama between Elon and the president. That Elon is gone and we have a new Elon because Elon now is working for shareholders because he has a compensation package to some degree, and we will be voting on a longer term compensation package. Elon is now your greatest asset once again, and today shows that. Ladies and gentlemen, we're going to get into all of this news, massive news today. Hit that like button as well as subscribe to the channel. We will also talk about the broader markets and why, for an example, the Russell is down around 0.5% at the time of recording this video. It actually has to do with what was a previously hawkish Fed member that now says, yeah, it's time for rate cuts. That's actually historically not a great thing for markets. I know, might sound confusing. Rate cuts are negative, what? Like that's not what you typically hear. We'll discuss it in this video. Do not worry. If you want to take it a step further, come check out the link down below in the description of this video to join the trading community. What we're doing over there is going out in the main theme of the next 10 years, which is AI, and finding small cap AI stocks that are undiscovered by Wall Street. Literally that have almost no institutional ownership, that are growing at hundreds of percents a year, nearly profitable, okay? These are some of the things that we look at: low debt, high insider ownership, meaning the CEO, the board is aligned with you. You make money, they make money. That's how it should be, okay? Once we identify these opportunities, we are taking medium-term time horizons on these investments. 1 to 3 years is kind of my time horizon here. We're not going for a 20%, 50, 100% return. We're going for 1,000% return, a 5,000 or 10,000 or 30,000% return. That would be a 30x if you're unfamiliar. Those are the kind of opportunities that I think are abundant in this market right now. Check it out, link down below in the description of this video. One stock in particular, I have over $70,000 in. I think the month of August is going to be a big month following the earnings report. By the way, Citadel just bought 7% of the company, if that doesn't tell you enough. Let's get into today's episode. Okay, so let's start with your Tesla stock news today, as we typically always do. Elon Musk, early this morning, said that Tesla is training a new FSD model with 10x the params and a big improvement to video compression loss, probably ready for public release at the end of next month if testing goes well. Then says minimizing probability of injury is the goal, but we will address these other factors too. If not entirely in this build, then shortly thereafter. But this is probably the news that is really causing Tesla stock to rally today. Let's be honest. Elon Musk says we are working as quickly as possible to get 100 plus Teslas operating for autonomous ride hailing. Can't use the word taxi or cab in California, in the Bay Area, and allow anyone to request a ride. Now, we've talked about this before on the channel, but already in the San Francisco Bay Area, Tesla has like 3 times more coverage than Waymo, like maybe 5 times more. The geo-fenced area in this area is much larger than Waymo. So the question really is, how fast can you scale and get these vehicles out on the road? For a little bit of context here, Waymo only has about 600 vehicles operational total If we could get over 100 plus in San Francisco alone and scale Austin to 100 plus, you're already starting to win that war against Waymo, which is something that Wall Street didn't think was even possible. And now it looks likely, which, is not something that Wall Street had in the bingo cards. And again, I think it's important to acknowledge that we have a brand new Elon Musk. We have an Elon Musk that works for shareholders, not against shareholders. We talked about this for a while over the last really couple of weeks, the last month or two, but Elon has not been incentivized to say anything positive about Tesla for years, okay? Ever since Elon has no compensation package, he doesn't want Tesla stock to be a $500 stock or a $1,000 stock. That does not help him at all. But now that he has at least some of the compensation package that is approved, the 96 million shares, but really going to vote on a long-term strategic compensation package, now he does have an incentive to get people bullish again on Tesla and to make Tesla the biggest, best AI company in the world. The tide is shifting, okay? And I think there has been, if we can simplify this, a negative premium put on Tesla, a multiple contraction, if you will, because of Elon's behaviors. Just Elon starting to be a positive force for Tesla again, you should see an added premium to the stock be, added once again. Kind of like after the election, we didn't have the robotaxi. We didn't know when that was coming. We thought regulatory approval would get better. Okay, yes, we were expecting kind of a strong economy. The tariff thing caught people off guards, but Tesla stock was a $480 stock. Yes, there was a short squeeze going on, all of this, but Elon was very much working in favor of shareholders. That changed in 2025 abruptly, but you're back to that. It's only a matter of time before Wall Street starts to assign a higher premium multiple just for Elon's behavioral shift. Now, also pretty incredible news today. Uber's CEO today on Tesla said, quote, they could be a competitor. They could be a partner. When you're talking about trillion-dollar TAMs, total addressable markets, there will be no winner take all in this marketplace. It's great to see Tesla in the market. They're taking their time and making sure they are expanding in a safe way. All of this competition in autonomous is going to create safer streets, and we're going to be a big part of that. So there is something very powerful just in and of itself with a company the size of Uber, a $183 billion market cap company that is solely in the ride-hailing industry, saying that Tesla is going to be a competitor. Could be a partner. Maybe that's a possibility. I think that sounds good as well. Partnership with Uber. Wow, incredible. Okay. Tesla's story is really going to be a margin story, an AI story long term. Partnering with Tesla would make sense for both companies, and I'm sure that will happen at some point down the line. And then they're both going to have their adjacent businesses as well. It's not going to be an exclusive partnership with Uber, something like Waymo does. Okay. But this, hopefully you can see why it sounds so great and could be positive for Tesla. Also in the news today, free FSD transfer is available in Germany and the rest of Europe with the purchase of a new Tesla until September 30th. And it obviously does not hurt today upon the news we talked about yesterday where Elon Musk says that he thinks it's probably correct if you invested $150,000 into Tesla stock today, that could make you a millionaire one day, which would be a return of over 560%. Like, just the CEO talking like that, talking about a 5x in value, obviously is not going to be seen as a negative. And again, to further the point that Elon is now a positive force working for you. If you've ever learned anything in your business life, you don't want to bet against the most prominent, savvy business people, okay? You don't want to bet against Bezos. You don't want to bet against Buffett. You don't want to bet against Elon. You don't want to bet against Gates, right? You don't want to bet against Peter Thiel. You don't want to bet against those kind of individuals. They're going to win, you're going to lose. That's just the bottom line, okay? Long term, short term, anything can happen. But long term, you don't want to bet against that. And you really don't want to bet against Elon out of all of them, okay? There's a premium that's starting to be baked in again. Tesla stock is not moving up 3% today because of 100 ride-hailing Model Ys in California. It's going up today because of, hey, if we can get 100, Model Ys ride-hailing in San Francisco, relatively, near term, what's that look like for the other 4,000, 5,000 cities in America? Okay, how fast could Tesla scale in other areas? How aggressive is Elon going to be in pursuing this scalability? And then the premium that's added on top of that. And especially since we've really come out of, or hopefully coming out of, a period where Wall Street was very positive on the stock, but retail got very negative on the stock because of Elon's politics and because of XYZ other crap. Retail has gotten negative on Tesla recently. Wall Street, as we have reported on, was growing more bullish on Tesla. In fact, in the last 2 months, hedge funds and institutions have covered almost 20% of the entire short position they had in Tesla. They've covered about 17 million shares. There's a reason for that. Their option activity has grown a lot more bullish as well. I think they are the ones that are right now to be bullish on Tesla, and retail, surprisingly, is on the wrong side of this. Now, retail, their emotions change daily or weekly or monthly. I think retail is going to start growing more bullish on Tesla, and that could help fuel this rally. Now, from a technical perspective, you got to remember, technicals are important, whether you like them or don't, or trade off of them or don't. The fact of the matter is, 80% of trading volume on our market. So if you have 100 million shares traded on the S&P or the SPY, 80 million of those roughly every day are traded by computers. Not you hitting the buy button or the sell button, computers. Technicals are important because computers trade off of them, okay? On a single stock level, on an index level. What we have here on a technical basis could get pretty exciting soon for Tesla. We have this triangle pattern here. It's not necessarily bullish or bearish, this in and of itself. It's telling you have resistance on the downtrend, okay, at some of your, recent peaks going back to May, okay? Clear resistance on the downside here and clear support on the downside as well. You're trending up, but kind of trending down. It's one of those weird technical patterns. The break higher or lower is what's important. Okay, and recently we've been finding a lot of support on the downside on this uptrending trend line, which looks good, especially following today. It's hard for me to imagine that we just whipsaw back down and break lower and then see a larger decline. Okay, we want to get above this 50 and 200-day moving average that are right conversed almost about $323. You break above both of these and then break above this downtrending trend line to the upside here. If you can break above that roughly 332, 331 level, then you're looking at what could be exponential, upside into the high 300s. I wouldn't bet against that kind of move heading into the November 6th shareholder meeting, especially when we get kind of the material of what we're going to be voting on, right? How big is the stake going to be in XAI? Okay. What's the strategic long-term compensation package for Elon? What are the tiers that we're really talking about here? Does the board think that Tesla could really hit a $20 trillion or $30 trillion market cap long-term? I think that could be a pretty huge catalyst for Tesla as well. Don't know when it's going to come out. But if it does kind of align with that second half of October timeline where markets should start to get more seasonally bullish into, November, that could be interesting. Really what I've talked about in the last couple of videos now as well is really from the second half of October through November and December, I think are going to be very strong periods for this market, specifically for risk on high beta companies that are in AI. Okay, that is the sweet spot. That is the Goldilocks zone for this market, really for investing. I believe in the next 5-10 years. I don't really think there's a better place to be. Am I interested in big tech right now? No, I'm not. Okay, but I'm very interested in high beta, hyper growth AI stocks that are trading at a reasonable valuation. That looks good. And that's exactly what we are doing in the trading community, and Tesla fits that bill. Now, your valuation may be different from mine and what's reasonable, but there's a lot going right for Tesla right now. And there's a lot that Wall Street is really underpricing. Now, in option activity from hedge funds and institutions, you have 35 different trades today, totaling $9.07 million with a positive order value of 54%. Some of these trades stick out a lot, like this one here, September 17, 2026, 710 call for $301,000, or this one here, a relatively short-term trade here, a March 19th, 2026, $700 call. This trade worth about $228,000. That's essentially more than a double from here by March of 2026. That's what, the rest of August, September, October, November, December, January, February, March. That's 8 months from now, more than a double. At Tesla stock is $700 per share. That is a very bullish options, trade. And there's many others here, right? Another March 19, 2026, $700 call for $100,000. Okay. The list kind of goes on and on. October 16th, 2025, like just in the next 2 months, 450 call here for $37,000. A March 19th, 530 call for $123,000. There's a lot of very bullish option activity coming through today. Look at this one, a January 14th, 2027, $960 call with a break even of $972 per share for $366,000 today. Yeah, people are betting on that upside for Tesla. Now, we do have a lot of broader market news to get into today as well. A lot of headlines. We're going to run through them pretty fast. I am kind of excited to share with you the flip-flop that you got from Fed Kashkari today. That's what really kind of hurt the small caps a little bit. We really just got to talk about that. But first, the India government says we have made our position clear on issues regarding oil imports from Russia. India's government says it is unfortunate that the U.S. should choose to impose additional tariffs on India. If you don't know, today Donald Trump put a 50% tariff on India for buying Russian oil. Now, the fact of the matter is he can do this because India does not matter for the broader economy in the U.S. The only countries that matter, China, Europe, Canada, and Mexico. Okay? The UK as well, but trade deal, that was the first trade deal. Okay? So, as long as we get a trade deal with those countries, the other ones just they're not big enough to cause severe economic damage. Certain sectors that are heavily concentrated in India, right? If just gonna make something up here, if all of the cameras come from India or something, sure, that could hurt the camera industry a lot. But is it going to cause the economy to go through some kind of massive depression or recession or even a recession at all? Absolutely not. There's just not enough business that takes place between the U.S. and India for it to move markets much. India does say that additional U.S. tariffs are unfair, unjustified, and unreasonable. And India says we will take action to protect our national interests. Now, here's some exciting news as well today. Trump is expected to speak to Zelensky on Wednesday. This comes after Witkoff's meeting with Putin. So potentially we could have some solid dialogue here in ending the conflict in Ukraine. Personally, I would love to visit Ukraine at some point, especially Western Ukraine. Probably stay away from Eastern Ukraine. But that could be exciting for markets because it alleviates some of these tariff risks, right? With India or China or some of these other countries that even purchase Russian oil. India is not the only one. China does as well. Now, Commerce Secretary Howard Lutnick says the Trump-era economy has, quote, officially arrived. Also in positive news today, Mexican President Sheinbaum rules out a bilateral trade agreement with Canada, saying that it is not necessary. So basically, Mexico is like taking the US's side. Like Trump would not like to see Mexico and Canada make a trade agreement and undermine the US. Trump advisors are to push for a temporary Fed governor to fill the seat of resigned Fed Kugler. A short-term Fed pick would give Trump more time on the chair choice. The Fed pick is likely to work in the government and be previously vetted by the Senate. The Trump administration urges countries to reject the UN plastics treaty that caps plastic production. The US weighs options for penalizing Russia beyond India tariffs, according to people familiar with the matter. And here you can see that Trump signs executive order imposing an additional 25% tariff on India. They already had a 25% tariff, so now it's at about 50% on the country. And again, even though I'm a bull, I have to share the bearish takes with you. I think that is my duty and obligation. It says here that tariff risks are underpriced, warns eToro analyst. Markets are underestimating the risk that US tariffs could be overturned by federal courts, says eToro's Lael O'Connor. If that happens, Trump may have to refund tariff revenues and go through a longer process to reimpose them, adding uncertainty. These risks could hurt U.S. assets, especially as tariffs are intended to raise revenues to offset Trump's tax and spending plans. O'Connor adds, a federal appeals court recently questioned Trump's use of emergency powers to justify the tariffs. Again, this is all kind of opinion-based, so we'll see what happens. Swiss government says president and trade delegation met with Swiss business leaders on Wednesday in Washington ahead of a meeting with the Secretary of State. The Swiss government says no meetings are scheduled with Trump currently, but the situation could change. Now, here's the big news today. Fed Kashgari says reversing course on rates may be better than waiting. Fed Kashgari says 2 rate cuts this year still seems appropriate. Kashgari says the Fed needs to respond to the slowing economy. And he says it still may be appropriate in the near term to begin adjusting the policy rate. He says, again, reversing course on rates may be better than waiting. You can see how this doesn't exactly sound great, okay? There's kind of an older saying on Wall Street that I'm going to butcher it here, but goes something like, you panic when policymakers panic, okay? Until policymakers panic, you shouldn't panic. Basically saying when the Fed starts to get concerned, you should get concerned. Until that happens, who cares what happens? That's why, like Fed Kashgari, being he was not exactly, in the rate cut camp before, switching to the rate cut camp today, yes, it's going to dramatically raise the odds of a rate cut, basically solidify a rate cut at this point, or multiple rate cuts this year. It does put Wall Street a little on edge or a little nervous, hence why smaller cap companies, riskier companies are selling off today more than established company. Fed Kashgari says it's still not clear what impact tariffs will have on inflation. Kashgari says if inflation does rise because of tariffs, the Fed could pause or even hike. Kashgari says ultimately you cannot fake economic reality. And he says the economy is slowing. Now, Apple is boosting markets today as well because they are committing to a $100 billion domestic investment. Kremlin's aide Ushkov says Putin and U.S. Special Envoy Witkoff talks were useful and constructive. White House senior advisor Hassett on the Fed board says they seem to be voting in a partisan way. And he does say today that Trump's highest priority is Fed independence. Again, this is a nod to the markets because the markets absolutely need Fed independence. Without that, you kind of destabilize the entire markets because what the hell happens next time you have a recession and, the Fed is in the government and the government doesn't want to free people out. So the Fed can't do anything and cause an even worse issue, right? There's a lot of different scenarios where an independent Fed is critically important for stability and longevity of the financial health of this country. This is a direct nod to the markets. And that's what I'm paying attention to right now. Just how committed to Trump or to the markets is Trump, right? And every single time, like there's a test, Trump shows how committed he is to the markets. And Hassett says that Trump's top priority is to make economic data reliable. And in a little bit of maybe arbitrage data here, take it with a grain of salt. Las Vegas's tipped workers say their income has fallen by more than half as tourism plunges. So if we look at the Fed rate monitor tool, okay, this tells you pricing for the Fed meetings up until, the end of 2026, okay, which by the way, just to show you guys, the highest probability currently has the federal funds rate between 3 and 3.25% by December 9th, 2026, okay. It's pretty close here for 2.75 to 3%. And decently high as well for 2.5 to 2.75% for the federal funds rate by, the end of 2026. But for September, there is currently a 90.6% chance of a Fed rate cut. Just so you guys are aware, the Fed always does what is priced in by the markets. You never get surprised by the Fed, literally ever. Whatever's priced in, it could be 2 days before a Fed meeting, or a day before, or 6 hours before a Fed meeting, or before the conference. Whatever is priced in, if something changes, doesn't matter, the Fed is always going to do it. Or at least in the past 40, 50 years, they've always done what is priced in. So it's pretty certain at this point you're going to get a Fed rate cut in September. The markets are also pricing in a 60.2% chance of a rate cut in October. And for December 10th, 2025, you are pricing in a 46% chance of a third rate cut, which is currently the highest forecasted probability. Okay, so you're technically pricing in damn near 3 rate cuts by the end of this year. And again, it's important to now go over this, right? Bowman is team rate cut. Waller is team rate cut. Kashkari is now team rate cut. And the vacant seat from Fed Kugler is going to be replaced with somebody that is team Fed rate cut. Okay, so that is 4 Fed governors right there that are now team rate cut. Okay, and depending on how the data comes out, we'll see just how much they are team rate cut. If Kashkari changes views, if we do get higher inflation or the economy looks okay, blah, blah, blah. But you're definitely favoring rate cuts. Rate cuts in and of themselves are bullish. They're not bearish. But the reason why the Fed is cutting is more important than the cuts themselves. If the Fed is cutting because the economy is going into a recession, stocks are going to crash. The last thing we're going to care about is rate cuts. If the Fed is cutting because inflation is not an issue and there's slight cooling in the economy, that's fine. Okay, that's bullish. Rate cuts outweigh the slight cooling, right? Because rate cuts should make the economy a little bit better. I don't think we're going to be in a scenario where we start to think a recession is actually going to happen, right? I just don't see that as happening. I think we're going to get rate cuts. Things are going to cool a little bit, but it's going to be net a big positive, especially for those interest rate, sensitive sectors. High beta, AI, high growth, that is the area I think is really going to excel from about midpoint October to the end of the year. That is going to be, I think, the most bullish 2.5 month period you have seen in a very long time. As we get ready for 2026, as we realize we don't have an inflation problem, we have very positive things from the BBB, no tax on tips, no tax on overtime, being able to write off car loan interest, couple rate cuts by then as well, with the expectation of multiple rate cuts in 2026. Again, 100% capital depreciation on capital investments, right? From a business perspective, that is very stimulative. Something I don't think the markets are fully appreciating at this point, among many other things that are going on, like the core AI theme is not going anywhere. All in all, long story short, I think the last 2.5 months of this year are going to be very positive. What happens in August, September, and the first half of, October, the next 2.5 months, a little bit of a toss-up. Sideways trading, new all-time high here or there, fall a little bit here or there. Like, don't be surprised if that happens. I'm not expecting a face ripper rally for the next 2.5 months, which should be positive. That gives you time to work, time to invest, time to get ready for what I think is going to be a very strong bull market into the end of this year and into 2026 and 2027 and most likely 2028, although that's too far out to give any kind of accurate forecast. Let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. Come see the stock that I just put over $75,000 into. I think is going to, fingers crossed. I mean, I'm fully positioned in the stock. Go crazy after earnings on August 21st. So we will see pure play AI stock growing at hundreds, thousands of percent. No institutional ownership, 40% insider ownership, 40% retail ownership. Like, there's nothing to not love. Partnerships with Google, Microsoft, Tether. Like, it's actually ridiculous the stock is trading at where it is. Long story short, check it out. Link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.